$4.3 billion. Looking ahead, revenue in the current quarter is expected to be around $65 billion, about $3 billion more than Wall Street forecasts. In October, CEO Jensen Huang revealed the company is sitting on $500 billion in AI chip orders for 2025 and 26. The upbeat outlook mirrors recent earnings from its biggest customers, Microsoft, Meta, Amazon, and Alphabet, all raising their capital spending to expand AI infrastructure. NVIDIA has been at the center of the AI boom, with much of the industry's technology running on its chips. The world's most valuable listed company has also been central to this year's stock market rally, as it accounts for roughly 8% of the S&P 500. Its mega deals and strategic investments have also lifted other tech firms, helping push markets worldwide to fresh record highs. For more on this, let's bring in Alex Leschik in Washington. He's the founder of AI literacy program ZEN. Welcome back to the program, Alex. Now, stellar results from NVIDIA once again. Let's talk details. What's driven this record quarter?
Great question. NVIDIA's quarter was driven along with about 25 years of perfect timing. I would say kind of demand for the AI infrastructure across the country. We just saw 77,000 or so chips be released to Saudi Arabia, which could be in correlation to the Saudi Crown Prince's recent visit to Washington, D.C. But the data center businesses are what's keeping this expanding at scale. We've never really seen this before. It's fueled by hyperscalers, model developers, and enterprises all racing to kind of host your own, not only host your own model, but host your own server and host your own infrastructure to something that you can trust and you have control over. I think is a real major shift we've seen in the last 10 to 12 months.
Now, the chipmaker also gave a stronger than expected fourth quarter sales forecast, with the CEO saying demand for its current generation Blackwell chips is off the charts. Where is most of this demand coming from?
This is coming from a handful of massive buyers, the major cloud platforms, so Azure, Anthropic, AI Labs, sovereign-level projects, securing compute for long-term national strategies, even governments in some cases. Blackwell-class systems in particular are getting snapped up faster than NVIDIA can manufacture them. And this has led to NVIDIA generating in their most recent quarter about $4,000 per second. Which is insane compared to what they've done previously.
Right now, NVIDIA has been at the center of this AI boom in recent years and drives around 8% of the S&P 500. Is the market dangerously dependent on just one stock?
I think the size of NVIDIA's order pipeline takes a lot of air out of the AI bubble narrative because they're able to fulfill that consistently. Their orders go out to about 35, 36 months. So this isn't speculative enthusiasm anymore. Maybe if we were in 2023, 2024, early 24, it could be, but these are long horizon infrastructure deployments from some of the most sophisticated and well-capitalized organizations in the world. The risk is now less about hype and more about whether the entire ecosystem can scale fast enough. And I think one of the things we see pop up in major discussions across the world is the resource push and pull between human infrastructure for hospitals, residential areas, and some of these data centers, as well as these super scaled structures and facilities that have recently emerged.
Right, and NVIDIA is saying it's sitting on $500 billion order book. Does that finally kill the AI bubble theory?
I don't think so. I think they'll be able to fulfill pretty much all of their orders. They have a great process that's been in place. Their manufacturing has been scaled over the course of, like we mentioned earlier, about 25, 30 years. So they have a great long play, and they carry enough weight in the market that its earnings kind of feel like a macro event. So when one company becomes influential, it naturally raises questions about concentration risk, but the upside is enormous, and they've shown no downside in slowing down their production or being able to fulfill any of the orders that they've already had outstanding.
All right, Alex Leschik in Washington, thank you very much as always.
Thanks for having me.
Meanwhile, Asian stocks rebounded on Thursday as upbeat earnings from Wall Street darling